Good morning, guys. It is Thursday, August 15th, 2024. This Bathrobe business. I got the coffee and I got the news. So let's jump into it. I got a mixed bag of stories for you. I think it's actually pretty interesting what's going on in the economy because we're seeing both ends, both good and bad. So let's start with retail sales. So retail sales are up. So for the month of July, retail sales were up 1%, much better than expected. So advanced retail sales accelerated 1% on the month, according to numbers that are adjusted for seasonality but not inflation. Economists surveyed by Dow Jones have been looking for a 0.3% increase, and we got 1%. So in other words, we got three times higher spending than we anticipated. In addition, jobless claims are down. For August 10th, as of August 10th, 227,000 jobless claims were filed, a decrease of about 7,000 from the previous week. So the job market seems strong in that regard, and spending is strong. Similarly, Walmart recorded a very strong sales quarter as well. So Walmart being a powerful indication of the market simply because they're such a large retailer. So Walmart beat quarterly earnings and revenue expectations. The discounter raised its full year outlook on strength in the first half of the year and said it's been steady and said has seen steady consumer health. Blah 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 blah. So that's essentially what I wanted to share in regards to that. Now I want to share with you guys the opposite side though. So here's some negative sides into the economy. So even though spending is high and quote unquote inflation is down, you know how I feel about that. I think inflation is up, and I'm going to share with you a couple articles that show that. Let's look at these two stories first. So this is a story from Axios, and it's talking about car sales. So in this story, it's talking about how car sales are declining for the first time in years. At least it has since the month of December. So we've got about 8 months of decline. However, the decline is fairly minimal. So despite everything, despite the fact that we've seen drops, quote unquote, in inflation, the average cost of a car is just down slightly. So a car sold in July was average cost of a car sold in July was about 48,000, down from an all-time high of 49. So it's down a grand nationally. So it's not that much. However, in addition, as we've talked about before, insurance rates are up. So motor vehicle insurance prices rose 18.6% in July compared with a year earlier, according to CPI. So we've seen this time and time again on inflation reports that insurance costs are going up. This is another one of the things I've advocated for why I don't think inflation is slowing at all. Now, I've heard a lot of people talk about, well, insurance is a trailing indicator. No, it is not. Insurance is a leading indicator, and here's why. Insurances, if they were a lagging indicator, would have been out of business years ago. Insurances try to forecast into the future. That is the whole job of actuaries and research, is to determine what the cost is going to be of repair tomorrow, because they have to have an outlook on the future. So the usually why insurance rates are going up is because the cost of labor is up in this scenario, or the cost of parts are up. So there could be two things contributing to this. Supply chain, which is still a factor because of the Red Sea, we've talked about the rise in we've talked about the rise of shipping costs globally because of container ships moving to larger larger container ships. And because of that, the price has been going up, but also because of labor, because these cars are more and more expensive to maintain and more expensive to repair. Insurance is a good indicator of what labor costs are going to be. And so this is not a good sign for inflation. This is showing that inflation is still very strong in the market because, like I said, insurance is not a lagging indicator. It is a leading indicator. Insurances invest a vast amount of resources into researching where their numbers are going to be in 6 months and a year. That is how they base their premiums. That's how they base their profit and loss. They do not work off of a lagging indicator model. If they did, if they were always playing catch up in the model, insurances would not be profitable, whereas insurances are the most profitable business to be in. Now, another negative sign for the economy is layoffs. Now, I would say that these layoffs are on par with what we have seen in the past. This is from Fox Business. I know it's going to try to play this stupid video. I'm going to try to cut. Oh, there we go. So these layoffs largely are coming from tech. Cisco is planning layoffs, although not yet announced. However, Intel is planning to lay off about 15,000 employees, or about 10% of their workforce. This is very interesting simply because Intel has been in trouble for a while. However, I've reported to you guys several times that they are planning to invest heavily in AI. At least that's what they've been claiming, with producing chips similar to NVIDIA with a fraction of the cost. It was supposed to be substantially less than what NVIDIA is producing them for. However, they're trying to trim $10 billion through 2025, and I don't know how they're going to be able to invest in AI simultaneously. So I think that a lot of their AI plans are going up in smoke, and that Intel is actually in a really bad spot, just kind of how we reported initially when all the AI stuff started. Once the AI stuff started, Intel started plummeting, especially when you consider the fact that COVID was one of the major reasons why Intel was doing good for the last few years. A lot of work from home, a lot of demands for high capacity PCs, but now more people are returning to the office, or at least that surge of initial people moving out of the office has not produced sustained sales progressively. Those people that have bought already own and don't need to do anything else. Similarly, Paramount Global is planning layoffs. This is about streaming. We've seen this time and again with them. We've seen it with Warner Brothers. Warner Brothers plummeted the other day because no one can seem to figure out how to make profit off of streaming, and that's not a surprise. One of the surprises in here was Stellantis. So this is actually coming directly because they are stopping manufacturing on a particular line of Ram trucks, and because of that, they're going to be shutting down an entire plant. It's about 1,500 tradesmen that will be probably cut. I'm sorry, no, up to 2,400 workers at the Warren truck plant could face indefinite layoffs. However, fewer workers than that will likely have will actually be impacted. So there's a potential of about 2,500 people on the chopping block. So that's pretty much it. Then they have a lot of these smaller companies that I don't think are worth mentioning. So we have the two dynamics of the economy. However, I would argue that this isn't necessarily a bad thing, simply because an economy that is dynamic often has these two polar opposites. We have healthy sales, we have good jobless claims, but then I still feel inflation is still very, very high. And I see that in the numbers time and again. That's pretty much it. Those are the news stories of the day. I hope you guys have a productive day, and I'll see you guys tomorrow.